PSU stocks have had a dream run over the last couple of years. While Nifty's last 1 year returns around 30%, PSU indices have delivered returns in the range of 85 to 94%. The numbers are impressive if you look at 3 year returns as well. Nifty's returns are at 15%, while PSUs are in the 40s. But this dream run seemed to have become a nightmare between 5th and 20th March. During this period, the PSU indices crashed by up to 11% compared to the Nifty 50's fall of 2%. Now, this recent fall in PSU stocks has reminded investors of Newton's rule: what goes up must come down. So, as markets are markets, no one can be sure of what lies ahead. So, it's very possible by the time you watch this video, PSU stocks are again marching ahead proudly, shrugging off all worries and fears. Yet, the recent fall in PSU stocks has raised the question: have they turned overvalued and are they ripe for a steeper correction? And a related question is this: are there any PSU stocks that are still attractively priced even after the run-up? Hello and welcome to Easy Money's YouTube channel. In this video, we will analyze the mega run-up in PSUs and try to decipher if there is still steam left in them. So, while we will see the broad picture, we will also take a look at individual stocks to assess if there are any promising ones that investors have so far ignored. In short, this video is useful for both fund and stock investors. But to get the full picture, you must watch it until the end. So let's begin. But before I begin, here's a quick reminder. You're watching this video on ET Money's English channel. हमारा एक हिंदी चैनल भी है जहाँ पे आप ये सारी वीडियोस हिंदी में देख सकते हैं. And if you are or know somebody who wants to understand the basics of finance and investing in a quick and easy way, we have a channel called 5 Minute Finance. I've included the links of both of these channels in the description. So the market-wide rally over the last couple of years also benefited PSU stocks. But apart from that, several other factors added fuel to the fire. The first reason is quite straightforward. PSUs went nowhere for a long time and hence were just waiting to explode. If we take a look at the very long-term movement of the Nifty PSE and Nifty PSU bank indices, we can see the extended periods when this indices stayed in a band. So PSU stocks may have become a storehouse of value. The second reason is a rise in the profits of PSUs. The current PSU rally began around April 2020 after the COVID-19 crash, and during this period, the profits of PSUs rose by over 4 times. Now, the third factor is the bad loan cleanup at the PSU banks and the subsequent fall in bad loans or NPAs. The gross NPAs came down by 2/3 between FY20 and December end 2023. Of course, there were write-backs also due to the excess provisioning that helped boost PSU banks' bottom line. Yet another factor is the low free float in some PSU stocks that catapulted their stock prices amid high investor demand. Low free float means less number of shares available for active trading. In the table, you can see the returns of PSUs that have public shareholding of less than 10%. And then there was the government's divestment overdrive that had helped improve the sentiment about PSUs and raised hopes of value unlocking. On the political front, it's widely believed that the current NDA government has a strong chance of staying in power after the upcoming general elections. That means policy continuity and business as usual for PSUs. So whatever initiatives this government has taken for PSUs over the last 10 years will likely go on unhindered. Last but not the least, in August 2023, PM Modi endorsed investing in PSU stocks, quoting examples of HAL and LIC.
शेयर मार्केट में रुचि रखने वाले को भी ये गुरु मंत्र है कि जो सरकारी कंपनियों को ये लोग गाली देना, आप उसमें दांव लगा दीजिए था, आप अच्छा ही हो जाएगा.
This statement from the PM has likely boosted investors' confidence in PSUs and contributed to the exponential rise in the PSU stocks. So these were the reasons behind the meteoric rise of the PSU stocks. Of course, these aren't all and there may be stock-specific reasons as well. But to cut the long story short, the PSU rally had a lot of tailwinds. And the bigger question now is if the PSUs are still investment worthy. And if yes, then what are those PSU stocks that you should keep in your radar? Let's talk about them now. Okay, let's begin with the valuations of the two Nifty indices. For the Nifty PSE, we will use a valuation metric called price to earnings or PE. Now, if you don't know what is PE, let me give you a quick explanation. The PE is derived by dividing the stock price and the earnings per share. The lower this ratio, the cheaper the stock or the index is. But to put it in perspective, it is better to see it in relation to the median. The greater the discount to the median, the cheaper the stock or index is. Now, if we see the historical PEs of the Nifty PSU index since April 2020, the current PE of 9.63 is higher than the median of 8.4. This suggests overvaluation. For the Nifty PSU Bank Index, a better measure is the PB. PB stands for price to book value. It is derived by dividing the stock price by the book value per share. The lower this ratio, the cheaper the stock or index is. But again, it is advisable not to see the PB in isolation. Rather, it should be seen in relation to the historic median. Here, we have considered data since April 2020. Now, as against the median PB of 0.81, the current PB is 1.54. That's an eye-watering premium. So, on an aggregate level, PSU stocks do look expensive. But the story is not over here. Let's check the stock-specific picture now. Like the two indices we discussed, let's divide PSUs into two segments, non-finance and finance companies. We analyzed 56 listed non-finance PSUs and 22 listed finance PSUs in our analysis. Let's first see the valuation of non-finance stocks across certain brackets of PE vis-a-vis the historical averages. Of the 56 non-finance PSUs that we analyzed, 7 stocks didn't have valid PE as these companies are in loss, either currently or historically. Just 11 stocks have their current PE below the 5-year average, and as many as 38 stocks are currently at a premium to their 5-year average PEs. Of these 38 stocks, as many as 25 are at a premium of over 50% to their average 5-year PE. That's quite some number. It's also useful to check the revenue and profit growth of the stocks versus the stock returns. Now, since the recent PSUs rally started around April 2020, we have considered FY20 and trading 12 months ended December 2023 for the calculation of revenue and profit growth. The stock returns are between April 1st, 2020 and March 19, 2024. A few observations can be made from this data. Number 1. There is a significant rise in profits between FY20 and TTM ending December 2023 for PSUs across most brackets. Number 2. The revenue growth, however, has remained mostly in single digits. Number 3. It's because of the rise in profits that the PEs have fallen, especially for the stocks in the below average 5-year PE bracket. Notably, there is a serial decline in median profit growth as one goes up the PE ranges. Number 4. However, even stocks that didn't deliver good profit growth have also seen their stock prices go up, as seen in the case of PSUs that had a premium of over 50% of their average 5-year PE. And that's a sign of a bubble. Now, the rise in profit minus the rise in revenues can be attributed to a reduction in cost or an improvement in margins. Such profit growth can't go on for long as there are obvious upper limits to it. For a rally to be sustainable, revenue growth should back profit growth, which doesn't appear to be the case currently. Worse, stocks with tepid revenue and profit growth have also seen a massive rise in their stock prices. This has made them overvalued, and this category makes up the largest chunk of PSUs. So all in all, there are clear signs of worry, but it would be worthwhile to take a look at stocks that are currently at a discount to their average 5-year PEs. If you are looking for reasonably priced PSUs at the moment, this list could be a starting point for further research. But do know that many of these companies, such as oil and metal PSUs, are cyclical businesses, and as their profits tend to show wild swings depending upon the cycle. But while cyclical businesses can show swings, your life can be largely immune to them if you have sufficient life and health cover. On the ET Money app, you can buy a 1 crore health cover at attractive prices. And you can also ensure your loved one's financial future by buying an adequate term cover on the ET Money app and website. Alright, let's take a look at the finance stocks now. For finance stocks, we will use the price to book ratio as the valuation measure. Now, there are absolutely no stocks at present that are at a discount to the average 5-year PB. Most stocks are at a premium of 50% or more to the average 5-year PB. For this bracket, while the median profit growth between FY20 and TTM ending December 2023 is good 30%, the income growth is in the single digits. A closer look reveals that as many as 7 companies of the 17 had a net loss in FY20. They have turned around since. As we discussed earlier, aggressive recognition and provisioning of bad loans is the likely reason for this. Subsequently, profit jumped as the pressure from bad loans eased and there were even write-backs due to recoveries. But if we see revenue growth, it's still in single digits. So again, profit growth is majorly not due to rise in revenues. So this may not have legs. Still, there are 3 companies that are at a premium of 0 to 10% to their average 5-year PB. So if you are looking to invest in financial PSU stocks, these 3 can help you get your research started. but you must do your own due diligence before investing in them. Okay, on an overall level basis, what does this analysis suggest? Let's conclude. From the analysis, we can say that a rapid rise in profits is possibly behind the surge in stock prices of PSUs. Of course, sentiment matters as well, and it has been largely positive over the last couple of years. The widespread belief that the current government will stay in power has also fueled optimism about PSUs. Further, for the rally to sustain, revenue growth must catch up. There is only so far PSUs can go based on market sentiment, cost cutting, marginal improvements, and bad loan recoveries. And not to forget that there are several PSUs that have gone up even without high profit growth and only on the back of positive sentiment. So, as an investor, it may be time to be cautious about PSUs. While you may not want to exit them completely, it may be time to take a strict look at the PSUs in your portfolio. And if you are invested in PSUs through a passive or active fund, it may be time to rebalance and reallocate. And if you have been thinking about upping your stake in PSUs, you may want to think twice before doing so. Last but not the least, the ever-present threat of mean reversion is always there. The crash between March 5th and March 20th was just a trailer of what it can do to securities that go far beyond their long-term averages. Now, does that mean that I'm scaring you out of PSUs? Not at all. The idea is just to highlight the risk involved so you can make an informed decision. And before investing in any stock or fund, whether it's a PSU or a non-PSU, do adequate research at your end. And with this, we have come to the end of this video. I hope you found it useful, and if you did, please do share it with your friends and family. I'll see you soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.